coming off the back of 2017's euphoria, 2018 was a real mixed bag of a year. On one hand, we saw numerous attacks against exchanges and various cryptocurrencies in the early part of the year, we saw regulatory crackdowns towards the end of it, and declining prices throughout. But on the other hand, we saw significant infrastructural developments that put us in a fundamentally better position than ever before. New fiat on-ramps were developed, new mainnets were deployed, and scaling solutions like the Lightning Network that 2017 showed we so desperately need made significant progress. And as all of that was going on, markets matured a bit, scams, notably BitConnect, were wiped out, and the bravest of institutions announced their intentions to start getting involved. Overall, 2018 was a fascinating, fairly devastating, but incredibly exciting year. And those are three things that I fully expect to carry through 2019. Let's take a look though at some of the more specific trends I expect to see happening in the next 12 months. In 2019, the main focus for many people will be the markets. After all, it's the most obvious and visible aspect that people can see of cryptocurrencies. After a dismal year in 2018 and an 80% correction, many investors are desperately looking for signs of some sort of recovery taking place. But while it's tough to imagine 2019 being significantly worse than last year, I also don't see it being much better. It's unclear if the December 18 lows were really the bottom of the market, and many actually expect to see lower lows coming in the near future. Delphi Digital, for example, have performed an analysis of Bitcoin's UTXOs and concluded that the market will bottom out in Q1 2019, assuming investors are acting now as they did back in 2014 and 15. While that might be quite an assumption as times have changed so significantly, what if they are correct? Potentially, where could we see Bitcoin find new lows? Well, for that, there's a fairly compelling idea that as parabolic markets like to return back to the previous high of the last bubble, we could end up retesting as low as $1,200 before we start to make any real progress upwards again. Whether that actually happens, of course, remains to be seen. I'm not entirely convinced of it myself. But once the worst of the sell-off really is behind us, I'm certainly not expecting to see any rapid or parabolic growth. There's a Wall Street saying that bears jump out windows while bulls climb the stairs, and it seems that cryptocurrency markets could experience a very similar phenomena. History, or at least 2015, suggests that the year following a dramatic crypto crash sees slow and steady growth that will surely disappoint anybody expecting the parabolic moves of December 17. People now are wary of getting caught up in the hype again, and there's likely to be a lot of profit taking or even outright abandonment at break-even on the way back up. That is going to slow our progress, and I expect to see some significant resistance at $6,000, which will surely be a big psychological barrier to a lot of people after months of fake-out bottoms there last year. Overall then, I think it's fair to say that if 2019 does see a more bullish market, that bull might be limping rather than raging. The collapse of cryptocurrency markets has caused pain to players across the industry, resulting in swathes of redundancies and cost-cutting measures in 2018. Frankly, I'm surprised that it's taken quite this long for the pain to really start showing, and for companies to really begin winding down their operations or downsizing them at least. And it's something that I expect to see continuing throughout 2019, especially now the SEC has clearly put a big target on the back of ICOs. Projects that didn't prepare for the crypto winter, that didn't keep enough money in fiat or were reckless with their savings, or were unprepared for the regulatory pressures that are now being applied, will downsize or fold in the coming months. Even mainstream efforts might suffer. It's easy to imagine some of the enterprise-grade applications being built, the sort of thing that IBM might be working on, will be wound down in the coming months. I believe that once a handful of blockchain and cryptocurrency companies have very publicly given in, a large number of others will then follow, no longer being worried about being the first to admit their failure, and now just trying to blend in with the crowd of capitulating companies. In a small number of cases, such as with the failed stablecoin Basis, who recently threw in the towel because of regulatory headwinds, investors will get their money back. In the majority of cases, though, they probably won't. It's quite possible that by the end of 2019, for perhaps the first time ever, the year will end with fewer cryptocurrencies than it started with. Having been immortalised in song at Ethereum's DevCon, BUIDL might just have become the new HODL, and it's a concept that I expect to remain central in the next 12 months. For the firms that can stick it out, that aren't giving up in this uphill struggle, they're going to continue with the heads down work to make the fundamentals and the technology of this space the best it has ever been. It's likely we'll see more headline developments in 2019 than we did last year, with some major releases expected from the new generation of blockchains, the sort of thing that Zilliqa, Cardano and Hedera Hashgraph are working on. Potentially, they'll be able to show us what the full potential of distributed ledger technology is. Older platforms with their larger developer communities and the ability to push in more directions at once won't take any of this oncoming competition lying down. Ethereum will continue their march towards proof of stake, plasma and sharding, and hopefully we'll get to see more than just some words on paper from them this year. Meanwhile, Bitcoin will continue to just improve and improve. The Lightning Network, which expanded so rapidly in 2018, despite being in beta for most of the year, will continue to strengthen, expand and improve, especially with the recent release of essentially plug-and-play hardware like the Casa Lightning node, making it easier than ever to become a Lightning host. Exciting developments like Schnorr signatures will continue to be worked on, while increased usage of older developments will allow Bitcoin to scale to higher transaction throughputs than ever before. SegWit adoption peaked at around 50% in 2018, so there's still some way to go there. And something that will help with SegWit uptake is increased usage of the SegWit native BEC32 addresses. Some major wallets and exchanges like Bitfinex, Coinomi, Electrum and Wasabi have already fully backed the development, while others such as Coinbase, Changelly and Kraken lack this full support. By the end of the year, I'd expect to see a lot more BC1 addresses being thrown around. And there'll be many more updates across every other major cryptocurrency out there, meaning that while the price action in 2019 might not be enthralling, the technical developments certainly will be. Last year, the regulatory landscape began to take shape, especially in more progressive countries like Malta, South Korea and Switzerland. 2019 will see a continuation and probably a strengthening of that trend. US regulators will continue to set precedents and clamp down on bad actors. Meanwhile, countries such as the Middle East, who are desperate for something to fuel their post-oil economy, will surely be looking at the potentially revolutionary new space developing and think that they want in on that and start providing some regulatory clarity to attract businesses. For example, we already know the UAE is intending to drop ICO regulations by the middle of the year. On an international level, the Financial Action Task Force is set to unveil their rules for cryptocurrencies in the next year, finally providing some international clarity that is so desperately needed. Some of these developments will be painful, at least in the short term, but the added clarity will be a major boost for this space in the longer run. And whichever way regulations go, they are certain to be a major talking point throughout 2019. Late last year saw some major developments for privacy coins, particularly Monero, who introduced bulletproofs to make their network faster, cheaper, and more private than ever before. And I expect to see privacy coins being a major trend this year. The introduction of more aggressive rules, strict KYC requirements, and the continued development of technology that undermines the pseudonymity of cryptocurrencies will drive more developers and more users towards enhanced privacy. I've already mentioned how Schnorr signatures could be introduced onto Bitcoin, and that will, among other things, aid user privacy. The original cryptocurrency also stands to benefit from other privacy developments such as Dandelion, which routes transactions in a fairly unpredictable way to make it harder to tell where a transaction came from. Meanwhile, excitement around Mimblewimble powered projects like Grin and Beam continues to mount. Ethereum could benefit from the Aztec protocol to improve privacy there, and I'm sure many of the more traditional cryptocurrencies focused on privacy, things like Monero, will continue to release some exciting developments throughout the year. While the lines have already been drawn in the battle against blockchain surveillance, 2019 might be the year that the resistance truly begins. An STO might sound like a class of embarrassing diseases you might accidentally pick up on a Friday night, but it actually stands for Security Token Offering. These are the legally compliant and grown-up version of ICOs, where companies can raise funds by selling tokens that are backed by actual tangible things, like profits, debts, and so much more. Security tokens offer a range of benefits over both utility tokens and over traditional financial systems, and that's led many to become very excited about the potential of them. If this all sounds a bit familiar, it might be because in late 2017, 2018 was being hailed as the year of the security token. Last year was supposed to be the time that STOs would explode into popularity, that billions of dollars of locked up wealth would be made liquid, and that dozens of impressive deployment and trading platforms would bubble up and facilitate all of this. That didn't happen. Instead, we saw steady but some significant progress among players in this space. Security token standards are beginning to formalize, issuance and trading platforms are starting to come out and even obtain regulatory approval, and despite the wider ICO market declining, STOs actually saw an increase late last year. While the bold claims of massive and rapid uptake of STOs is probably another example of the short-term overestimation that so many in this space are guilty of, probably including myself, 2019 will almost certainly be a major year for security tokens. The popularity of ICOs and utility tokens as a whole is waning, and that will drive more companies to issue STOs as a form of fundraising. But just marginally improving the ICO experience really doesn't fulfill the exciting potential of security tokens. What we really want to see is some fusion of traditional finance with blockchain. That kind of development to happen in any major way will take years and quite possibly even decades. But what I wouldn't be surprised to see in 2019 is a growing number of very forward-thinking and fairly brave companies beginning to issue tokens for highly illiquid assets. Things like buildings and paintings might begin to be represented by security tokens in a non-trivial way in the next 12 months. At the same time, we'll see some significant infrastructural developments with security token platforms launching, improving, and finding regulatory approval. So, while this may not sound like the crazy and explosive uptake that some were hoping for, and calling 2019 the year of the security token may well be a stretch, I think it's likely we'll see another crucially important year of development for this much hyped sector. Another extremely hyped area of the cryptocurrency landscape coming into 2018 was the decentralized exchange, and again, the year failed to deliver on the massive promises that were made. But, as with security tokens, I don't think prognosticators were wrong in their predictions, I think their timing was just a little bit off. A year on from the largest exchange hack in cryptocurrency histories, and just weeks after the BTI published their report on exchange manipulation, the case for decentralized exchanges remains as clear as ever. Of course, the Bancor hack last year showed that DEXs aren't perfect, and that sometimes centralized points of failure can be placed into them, and that was a great learning experience that we can carry forwards into this year. 2019 will surely see bigger and better things for DEXs, especially with Binance throwing their hat in the ring and finally unveiling their DEX complete with 1 second block time and 1 block confirmations. Combining that technology with Binance's easy-to-use interface, with their large range of currencies, and most importantly with their large user base, and we might finally see a decentralized exchange that achieves genuine popularity, usability, and liquidity. Alternatives and competitors will of course come to market this year as well, with things like AirSwap and the Ivan on Tech-backed Resistance also set to come to market in 2019. Finally, we could be in for a year where we can begin to wean ourselves away from centralized exchanges. I've already mentioned how utility tokens and ICOs have lost some of their appeal as a fundraising mechanism, but in many cases it's becoming clear that utility tokens being stuffed into products is actually making them worse, and that many utility tokens are utterly pointless. This is a realization that a decentralized exchange, DDEX, seems to have come to, with the project CEO announcing in December that they would be forking the 0x protocol to remove the token. As one of the largest exchanges making use of the 0x protocol, This is a pretty significant development. DDEX cited the unnecessary friction caused by fee-based tokens as the reason for 0x's removal, and the announcement came after months of skepticism and debate around the purpose and, well, utility of the utility token. Many of these tokens do have speculative value, and they rise and fall in value based on announcements from the team, but in reality, they've been integrated and designed poorly, and they have no real long-term potential or value, something that's understandable as many of them are just awkwardly tacked onto products, so the team has a reason that they can issue them to raise funds in the first place. In the coming years, I expect to see a lot more stories like DDEX's, with coins and tokens being removed from products and killed off with the aim of improving the underlying product. And this is a trend that I think could begin in 2019. The ICO and utility token boom has resulted in numerous poorly designed systems that likely won't bring long-term value to investors, that will actively make user experiences worse, and will actually harm uptake because it's asking customers to go away and find specific niche tokens before they can use a product. Hopefully, 2019 will be the beginning of the end for this kind of design. With cryptocurrencies falling in value throughout 2018, a major doubt and skepticism around Tether, it's unsurprising that alternative stablecoins became a major trend towards the end of last year. And that's a trend that I expect to see continuing in 2019. Users now have the choice between fiat-backed, crypto-backed, gold-backed, and algorithmic stablecoins, and the marketplace is getting extremely crowded, and looks like it could get even fuller, with potential for companies like Facebook issuing their own stablecoins. Between them, all of these different alternatives have billions of dollars locked up in steady state already, and it's the potential of billions more that will drive competition among them in the coming year. That's because stablecoins are potentially about so much more than just being an escape route from cryptocurrency's volatility. Potentially, they could become the first widely used, widely accepted cryptocurrencies out there. Their static prices make them useful as day-to-day currencies for spending, while the underlying technology mean that they retain many of Bitcoin's benefits, such as low-cost, borderless, and rapid transfers. Crucially though, they don't tend to be censorship-resistant or permissionless, and that means that if you made a transaction that the issuers of the stablecoin didn't like, they can revert it and maybe block your funds. Whether that factor would be enough to put most people off using stablecoins remains to be seen, but I doubt that many people would even consider the need for a censorship-resistant currency, at least in many more open and democratic countries. What this means is that there is most certainly potential for stablecoins to become extremely widely used as an economic tool, accessible to hundreds of millions, if not billions of people. Every player in the stablecoin space will now be looking to set themselves apart from the others. They want to become the premier option to give themselves the best chance of adoption and growing a network effect moving forwards, and that will drive innovation in the near future. Quite what the different stablecoin camps will put out to try and keep ahead of the competition remains to be seen, but things like faster transactions or lower fees seems like an obvious place to start. Additionally, there might be new features entirely, things like baked-in KYC for the companies looking at fast and very compliant growth, while other more privacy-focused companies could start issuing private stablecoins in an attempt to appease the more hardcore cryptocurrency audience. It's certainly going to be interesting to see how the stablecoin wars evolve through 2019. A fascinating and fairly troubling story throughout 2018 was the release of Venezuela's Petro, a supposedly oil-backed cryptocurrency issued by the government. In reality, it doesn't seem to be oil-backed or a cryptocurrency at all. The Petro isn't even yet a tradable token, there are no wallets for it, and the blockchain that supposedly everything is happening on is some sort of distraction that's supposed to convince you that everything isn't actually taking place in some centralized government databases. The entire situation would be laughable if the Venezuelan government wasn't forcibly converting people's savings into the Petro to try and force adoption of it. Sadly though, this government-issued anti-Bitcoin is probably the first of many central bank digital currencies that will be issued in the coming years, with dozens of countries expected to be exploring the options at the moment. And even in 2019, I expect we'll see several countries launching their own digital currencies. Many of the initial adopters will be countries looking to circumvent international economic sanctions. Iran, for example, is often stated as a country that's been very much investigating digital currencies, while Russia's crypto ruble is rumoured to release in 2019. Other countries like Thailand might have slightly less nefarious ideas in mind, with plans to improve economic efficiency or cross-border payments using their digital currencies. Hopefully these efforts won't be misused. Hopefully we won't see governments using CBDCs to increase their surveillance, increase their control over people's spending, and prevent money going to any groups they consider dissidents. But with a number of highly authoritarian regimes investigating digital currencies, that seems unlikely, and the future could be very concerning for millions and quite possibly billions of people around the world. This is going to be an incredibly important area to watch in the next few years, and I think there could be some big developments through 2019. So that's it for my list of kind of predictions and things that I maybe am looking out for in 2019. There's obviously so many more things I could have put into this, but let me know what you think is most likely in 2019 or what you're looking forward to most, what trends you expect to see. Always like reading that sort of stuff. Have a great day. Thank you so much for watching as always, and I will see you in the next video.